What would you do if I told you that you've been reading volume wrong this whole time? In today's video, I'm going to be explaining how to correctly read volume, and I'm going to be showing you many trades that I have taken and what I look for in the volume to confirm a high probability trade. But real quick, as always, before we hop into the video, if you guys do find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so to help paint a better picture, we're just going to look at some examples real quick. Now, for me personally, volume is always most important when price is coming up or down to a level of interest. These levels can stem from supply and demand, support and resistance, Fibonacci, EMAs, so on and so forth. So let's just say that we have price going up, right? We have this green candle right here. We have another green candle right here. And then we have one more green candle right here. Now, also these candles are going to have wicks. So let's just give that a little tiny wick to the bottom. And then let's give this one another one to the bottom. However, this third candle is going to have a long upper wick to the upside. Now, this could just be that sellers stepped into the market, but this alone does not say, hey, let's look for a potential short position. If this were to just happen in the middle of nowhere on the price chart, I don't necessarily care too much about it. However, if price were to come up towards a resistance level, a Fibonacci level, again, many different ways to identify areas of interest, and I see something like this is then when I really want to pay attention to the volume. And again, I'm going to show you guys many different examples. So again, we have 3 green candles in a row. Let's just say this is our volume on the first candle right here. Then on this second candle right here, we have another green volume a little higher. However, on this third candle where price comes up into resistance and we get this long upper wick, let's say that the volume now elevates a significant amount, right? So we have a nice green candlestick with decent volume right here. Second candle, more volume. However, on this third candle, price comes up into resistance and we start to get very heavy volume. See, a lot of people, what they do is they just see a green candle with green volume and they interpret that this is all buying. However, that is not true. We have to piece together the price action, where price is currently at, and then from there, we can fully understand what is happening in the volume. So because price came all the way up to here, right? When we have a green candle, price opens down here. At some point throughout that candle, price came all the way up to here. However, sellers drove price all the way back down to here. Now, because we have that area of resistance, we can actually start to assume that actually a majority of this volume came in on the sell side. So because we have that area of interest, confirming price action as well as confirming volume, this would actually set up for a high probability short position. And again, I'm going to be showing you guys many different examples of this here in a little bit. So what you could do is go short at the end of this candle and have your stop loss right above these highs and aim for a move to the downside. Now let's just also pretend that this candle actually ended up ending red. This would actually be even better if this candle ended up being red. So let's just switch that to red, switch the volume to red, because now what this is going to show us is that price came up into this area of resistance. Because this is a red candle, price opened here when its high is here. However, at the end of that candle, price closed all the way down here. So now this is an even stronger signal because they drove price all the way down here right off of that level of interest. And then we have elevated volume as well. But again, I see a lot of people getting it mixed up where they see a green candle with green volume and they just assume, hey, this is buying that's going on up here. That is not the case. Again, you have to always piece together the price action with the level of interest and then the volume, and then from there you can fully understand what is happening. So let's just do another example. Say price is coming down to the downside. We have a red candle right here, and then the next candle is also going to be red, and then we get one more red candle to the downside. However, this third red candle is coming down into a level of interest, whether it be a support level, a demand level, a fib level, an EMA, VWAP, whatever it may be, but price is coming down towards an area of interest. In this case, let's just say that it's going to be a support level right there. So here's our 3 red candles in a row, and price is coming down towards that support zone. So let's just pretend that we have all right red selling volume right here, and then again we have all right selling volume. However, this time when price comes down into the level of interest, we actually get elevated volume. Let's just go ahead and move these down. So price is coming down towards the level of interest. We have all right selling volume, but then price hits the level of interest. And let's say that volume spikes a significant amount and we get this huge red volume coming all the way up here. Just because this is a red candle with red volume does not mean that it is all selling. Again, this is where a lot of people go wrong when they interpret volume. They just assume red is bad, green is good, red is selling, green is buying. However, you have to look at the price action and you have to look at where price is currently trading. Price just came down to a very strong area of support. Price opened at the high right here, went all the way down to the low right here. However, buyers stepped into the market and drove prices right back up into this level right here. So actually, instead of interpreting this all as selling, we can begin to interpret that a majority of this volume right here was actually on the buy side, and buyers are willing to push price back up. So because we have that level of interest with confirming price action and then confirming volume, this would set up for a high probability trade to the upside with a stop loss right below these lows. So again, you need to really pay attention to where's price currently trading, what's going on with the price action, what's going on with the volume. Now, for me personally, like I explained earlier, if this were to happen in the middle of nowhere, like let's just pretend that there was no support right there and then we had that end up happening, I don't necessarily really care about going long because there's no level of interest behind it. Had there been a level of interest, then okay, I would be willing to take that trade. But if there is no level of interest, I am not interested in taking this trade to the upside. All right, so let's take a look at many different trades that I've taken in the past, starting off with this SPY put trade that I ended up taking right here. So as you can see, we have this clear-cut pivot high down to pivot low. Price is clearly in a downtrend, therefore we want to start looking for puts. Now, as we can see, price came up towards the 50% retracement. Yes, we have green volume, but look at that green candle plus the wick plus the level of interest. Again, this is not all buying. And actually what we can do is start interpreting that a majority of this volume right here actually came in on the sell side at that 50% retracement. Now, not always is price immediately going to react and start moving in your favor, because then from there, what can we see? Price came up again towards the 61.8% retracement. Look at that volume. Is that all buying? Looking at the price action, the level of interest, and that volume? No. And again, we can interpret that a majority of this volume right here actually came in on the sell side, sellers looking to sell short at that 50% and the 61.8% retracement. And then from there, what happens? Price comes up, tags the 61.8% retracement. We get this red candle right here, elevated selling volume, and then from there, price continues to the downside. Again, you have to piece together that volume with where price is currently trading and the price action. So that's just one example. Let's go ahead and look at another example on QQQ. As you can see, I took this pivot high to pivot low right here. This is a trade that we took, what was this? I think this was the one, yeah, this was a trade that we took last week all the way down into 345. So pivot high, pivot low, price comes up towards the 61.8% retracement. What do we see? We have this volume right here, a little elevated, nothing insane about it, but we have this upper wick right here. What can we assume? Actually, a majority of that volume came in on the sell side. And then we get a nice little candle right here. Again, we have that long upper wick. And then right here, price comes down with this red volume right here, elevated selling volume. We ended up getting short on this candle right here. Again, this is a 2-minute time frame. So many different time frames are going to give you different signals. I personally like to snipe my entries on a 5-minute or a 2-minute time frame. And we ended up getting short with a stop loss right above 348.40, and we're able to ride this all the way down into 345. Let's look at this example right here of an ES liquidity sweep. So we have this overnight low right here at around 245. And then price, as the market opens, it pulls to the downside. And yes, we have red volume right here. We have a red candle and it's elevated higher than the previous candle. However, we have a level of interest. Price reclaimed that previous low over here, the overnight low. And I actually ended up getting long because of this with my stop loss right below here and was able to catch a beautiful move up into my reject level all the way up here. So again, we have this little lower wick right here, and a lot of people will just interpret, oh, it's selling, we should continue to go down. However, it could be a long lower wick, it could be a very small lower wick right there. What's important is that we reclaim that level with elevated volume, so buyers were clearly willing to buy off of this level right here, and it set up a high probability trade to the upside with a stop right below 42.12 or 42.13. Here's another example. This is a trade that I ended up taking on GLD for a bounce. I like to use the 1 hour 21 EMA for a bounce. Let everybody know this was my level that I was watching. I come up with a free pre-market watch list every single morning, so if you guys aren't tapping into that, make sure you do, 8 a.m. Eastern time. But I said my bounce level on GLD that day was this 1 hour 21 EMA. So now if we break it down to a 5-minute time frame, let's start looking at the price action and why I entered on this candle right here. Now, I've talked about this trade in the past and people are like, oh, well, this is BS because look at this candle right here with that volume right there. Why didn't price go right back up off of that? Because it did not touch the level. That's why it's important to have your level of interest and then watch price action as it gets to it and the volume. For all we know, this could just be early buyers coming into the market. However, did price touch my bounce level at this candle right there that I'm showing you guys, this one right here? No, this candle hit my bounce level right here. So this could just be early buyers coming into the market. Does this confirm a long trade? No, it didn't hit my level of interest. If anything, this just says, okay, buyers could potentially be starting their position right here and they're willing to add as it gets down to the level of interest. But this by itself is not enough for me to enter. Again, if we're not hitting my level of interest, I'm not looking to enter that trade. It's only when we touch our level of interest. So yes, we have this elevated volume right here with this nice lower wick. We can assume that actually a majority of this volume came in on the buy side. But then as price came down towards my bounce level, that 1 hour 21 EMA, notice the volume and notice that lower wick right there. And I was able to catch a nice pop to the upside on this trade. So again, it's piecing together the volume with the level of interest and the price action. I'm going to keep repeating that because that is what is so important. And again, like I discussed previously, if we just have this happen in the middle of nowhere or this happen in the middle of nowhere with elevated volume, that's not enough for me to take the trade. Here's another example right here of a meta bounce that I was able to take up into VWAP right here. Just taking this clear cut pivot low to pivot high, told everybody I was watching 314.87 to 315 for a bounce. Price comes down, and I don't think I took a screenshot of the 2-minute time frame on that. No, I didn't. But price came down towards the level and price bounced off of it. Elevated green volume right there. So actually we have the green candle with the green volume, which confirms that, okay, there are buyers in this area, but we bounced right off the level. We ended up getting long with our stop right below this low, and we were able to catch a nice pop up into VWAP. Now, the final example that I'm going to be showing you guys is this short position that I took on QQQ. So as you can see, I took this pivot high to pivot low right here. Price comes up into the 50% retracement and VWAP. But look at this volume right here on the 2-minute time frame. What can we actually start assuming off of this? There are sellers in this area. Yes, we have a very small lower wick, but where would that volume be coming from? Because look at how small that candle is, but all of that volume, what is that? Pretty much almost as high as the opening volume over here. Where could that more than likely be coming from? Sellers at VWAP, sellers at the 50% retracement, right? And then from there, what does price do? Pops up into the 61.8% retracement, rejects it there. So we already have confirming sellers are more than likely coming in right here. Price rejects here, price rejects here, price rejects here, comes up one more time. We have this small upper wick right here, green candle, green volume right here, elevated green volume. But guess what? It rejected right off of our level of interest. So we can actually assume that more than likely a majority of this volume is coming in from sellers up at that 61.8% retracement. And then from there, what happened? Price dropped all the way down to the downside. So hopefully that video did help you guys out on fully understanding how to read volume. If you guys would like to see more videos on volume, definitely make sure to smash that like button as well as clicking that subscribe. And again, make sure you're clicking that bell icon so you're notified when new videos are uploaded. Make sure you guys tap into the free live streams I do every single morning at 8 a.m. Eastern time. Everybody have an amazing rest of your day, and I'll see you guys in the next video.